Good morning, everyone. Welcome back to the show. In today's show, I'm going to be talking about what went down yesterday with the ETH merge, and then starting to look forward a little bit more into the future. What are the next narratives now that the merge is done? The last few months, it's all been merge talk. We've been prepping for the merge. We've obviously been trading into the merge, and now it's done. So now we have to work out what are the next things that we have to keep our eyes on. So in today's update video, I'll be showing you everything that I have got my eye on looking forward into the next few months, some of the very key updates from some other ecosystems that are going to be happening in the near future, major token unlocks, upgrades, and all sorts of things that we are going to get into related to the rest of the crypto market. Smash the like button if you're excited for this show. And then at the end of the show, if I have a little bit of time, I'll be answering some questions as it's a Friday here. And I also want to interact with you guys as well. All right, we all good? Let's get straight into the show. So the merge was done. We actually did merge. So it was a successful merge. And I haven't seen too many issues with liquidity or protocols that some of us were anticipating. I've seen a couple issues across some of the smaller protocols, but by and large, the Ethereum merge did go through successfully, which is a very good sign. So we have seen the checkpoint finalized for an official merge. Tim Bako, one of the biggest developers on ETH, did confirm this alongside Vitalik. Now, how did the price respond though? Well, initially, very positive. So kind of leading up to the merge, the major question was, is this a buy the rumor, sell the news event? On yesterday's show before the merge, I did say that a successful merge was likely priced in and that an unsuccessful merge wasn't priced in. So that really left the risk to the downside in terms of this Ethereum merge. But we actually did see a positive price performance after the merge. Now, was this drop because it was a sell the news event? You know what? I actually don't think it is. Now, I've seen a lot of people on Twitter coming out and saying, oh, buy the rumor, sell the news. It was so obvious. We were obviously going to dump, but they're missing the big picture here. They totally missed what happened on the stock market yesterday. And we did see this massive reversal from the NASDAQ, resulting in a massive 7% pull down if we include yesterday. And today, I think the NASDAQ went down another 2.5%, right? So those are big drawdowns for the NASDAQ. In fact, for a 2-day average or a 3-day average on the NASDAQ, that drawdown is the largest we've seen since early June. So it's the largest drawdown on the stock market in many months. And that just coincided with the ETH merge. Now, do you think the stock market cares about the ETH merge? No, so they're not selling the news. So I do think this major drop we saw from Ethereum, which we also saw from Bitcoin, wasn't really anything to do with the merge. I think it was mainly just to do with the stock market. It's as simple as that. So I don't think it was a sell the news event yet. Obviously, we do need to see how things play out because there are massive buy orders, massive sell orders. The leverage ratio is at almost its all-time high for Ethereum. It's pretty crazy. So there's a very large vested interest in the market to trade this token. But right now, that's not really what I'm worried about. I'm more worried about a further stock market collapse or a breakdown past this major range here that we're currently sitting in. Then that would result in a bleed across most altcoins, not just Ethereum. But obviously, we just need to keep our eyes on the stock market. That's really what we have to pay attention to in such a macro dominant environment. But I want to look ahead in this video and not necessarily look at the current charts because I want to prep you guys for the future basically today. But yeah, this is the key level I'm looking at anyway. It's the 1417 level, or 1417 to 1425. We did break diagonal structure here, but that was just a minor trend line on the 1 hour. Now we're out on the 4-hourly charts. This is the next level I'm looking at, this 1420 region. Very, very, very key level. Previous resistance we broke through and we've bounced off it actually a couple times in the past couple months. So that is the level that I am looking at. We had, before the merge happened, actually net inflows into exchanges. So that kind of started a lot of rumors whether there was going to be a massive dump, as many people were putting their Ethereum onto exchanges. That was kind of spooking the market a little bit. However, I think the reason why a lot of people were putting a lot of their ETH onto exchanges was simply to take advantage of the proof of work airdrop, because obviously if you have it on a non-exchange that doesn't support the proof of work airdrop, then you wouldn't get access to that airdrop. It's actually very interesting because the proof of work, which is now called Ethereum Fair on Poloniex, is now trading at $17. So it's performed very, very badly, which is what we kind of expected. However, to be honest, in the past day, it's kind of shown a little bit more strength than I thought. But pre-merge, obviously there was that big sell-off leading up to the merge, and then we have had a little bit of a bounce there. But I mean, this token isn't something I'm bullish on. $17. So it's pricing it like at around like 1.5% of the Ethereum total value, which I'd say is about right, because I don't see too much value in the proof of work chain. To be honest, they don't really have much support, at least not from projects, devs. It's basically, miners have the major vested interest here. But that was very, very interesting to see how that was priced into the market. I wouldn't trade this project, but it still is interesting nonetheless. But clearly these net inflows didn't result in that sell-off, because straight after the merge we saw the pump. That was mostly so people could protect themselves against this airdrop. The other thing we saw was the participation rate go through successfully. So we needed 66% participation rate from validators to go through with the merge and reach finality. We had basically 96 to 97% participation. So very, very strong. All the latest blocks have been finalized. We've only missed a couple blocks, actually. If we could see it here, we've been extremely stable in terms of the blocks on Ethereum. In fact, once the merge went ahead, we've been even more stable than before the merge. So we only missed one block out of the first 100. So merge stability was very, very strong. So that is a very positive sign. And I just want to say congratulations to all the Ethereum developers and everyone that has made this happen. It's been a 7-year process. And I actually think it's remarkable. One of the biggest network upgrades of all time, not just in crypto, but even in traditional finance, traditional technology. This was a major, major upgrade to, upgrade a network worth hundreds of billions of dollars and do it live without any errors. People didn't even know that essentially even happened, because trading had barely even halted on chain. So, it was so seamless. So congratulations to Vitalik and the rest of the team. Let's look forward now. Let's look into the future. Let's look at some other events post-ETH merge that we got to keep our eye on. And let's also look at how some of these other Ethereum tokens may respond just before we get into all that talk. Very, very fun stuff. Just remember, if you do want to trade anything Ethereum included, any of these altcoins that I'm about to talk about, you can do so on ByBit. Claim that $4,200 bonus if you sign up as well. Help support the channel. It's a win-win for both of us. So if you do want to sign up and don't have an account, I know most of you do at this point, but I'll just say it anyway for the ones that haven't claimed the bonus. You can sign up there using the link in the description. All right, let's look forward. Forward-looking time now. So the first thing that we have to look forward towards is the Ethereum token supply. So we have seen a supply change of 130 ETH, which equals almost $200,000 worth of Ethereum that has actually not been burnt, but has resulted in a negative supply. So one of the major changes of the merge was putting Ethereum on a path to being deflationary. Now, Ethereum, despite what you may hear from some people, even Rand included on yesterday's show, Ethereum is actually not deflationary right now. So technically, it's not deflationary. But certain models predict that based on current gas fees versus the current issuance of supply, that it will become deflationary. Key caveat there is that we're expecting it to become deflationary based on modeling, but it is not technically deflationary because it relies on fees. Clearly, the network right now is being heavily utilized, meaning there is more Ethereum being burnt than there may be in a month when there's less transactions. So we do have to keep our eye on this to see actually how deflationary ETH is. But the major EIP upgrade means that less Ethereum is going onto the market. So that is great from a tokenomics perspective. And it means that we can actually start burning Ethereum. And that is also positive because it results in a decreased net supply, because you've got the issuance, which is the amount going onto the market, and you've got the burn, which is the amount being burnt off the market, resulting in a supply change. We just saw that actually went down. So this is variable, because Ethereum is being released to reward validators for staking ETH. So that is going to put supply onto the market. And then as people burnt, supply will be burnt off the market. There are models which estimate based on recent data how deflationary ETH will be. And this will go a long way in determining how the ETH price actually responds long-term from the burn. So if we look at the 7-day time frame, if we take the aggregate of the last 7 days and plot that across a larger time frame to come up with an estimate on a yearly basis, Ethereum would actually grow in supply. So no, Ethereum is not deflationary based on the past 7 days, but the supply growth is plus 0.1%. Now, before this, it was like plus 1%. So it's still a massive increase in its tokenomics, or I should say decrease technically in its supply, which is still very positive, but it's not technically deflationary. So I just want to kind of quell those rumors. You hear it a lot And yeah, it's not really true. It's not really deflationary, but it could be. So because if we take the all-time time frame, minus 1.4% deflation. So basically, it depends what time frame we're looking at, and this all depends on fees, guys, and how many people are using the network. So let's hope it is based on the last hour, it's positive. Based on the last day, it's even. Based on the last 7 days, it's positive. Based on the last 30 days, it's positive. Based on the last years, it's negative. So look, let's just see what happens. Obviously, once the Ethereum network really picks up steam again, we're going to see that burn really kick into effect once once we get a bit more momentum back in the market, which could be I don't know. I'm not going to give a time frame on Ethereum's usage because there's a lot of factors, but when that happens, that's when we'll really start to see that effect kick in. So the only chart that really matters post-merge now from a supply perspective is the emissions chart, because that is obviously, what is dictating the tokenomics here. So this is one to keep your eye on. You can look at it on Glassnode. It's net ETH emissions. That will show you how many Ethereum are being emitted onto the market. Excuse me. So obviously more emissions, and then that's gradually been going down, and we're expecting another taper off in emissions as this merge burn starts to kick in. And also this person, I just wanted to mention quickly before we get into other ecosystems, because I know you guys are probably sick of hearing about Ethereum by now. We're going to get into the fun stuff. Someone actually minted the first NFT on Ethereum. Pretty damn cool in my opinion. If you got your hands on this little merge panda, they actually paid 36 ETH in gas. I'd say this is historic now. I mean, 6,000 likes, whoever got their hands on this, it's probably worth more than 36 Ethereum now, just because it's like very symbolic. The first NFT on proof of stake. I mean, to be honest, I'd put a bid in. I'd put a bid in for this NFT if I ever had the chance to buy it, because that's pretty damn cool. So congrats to whoever minted that. You may have got yourself a bargain at 36 ETH, even though it doesn't sound like it, because that's like $50,000. And yeah, all right, let's get into the other tokens now. Ethereum Classic, just touching on it quickly. Hash rate has exploded. We always knew hash rate would be diverted from the proof of work chain across to some of these other Ethereum proof of work chains as miners kind of change where they're actually mining. More miners basically means a higher hash rate. So Ethereum Classic hash rates increased. The Ethereum Classic price, which was one of the common hedges to Ethereum, has been one of the greatest beneficiaries of this merge. Not just in the lead up, but also post merge. We did see that spike before we had a little bit of a taper off after the stock market cooled off a little bit. But I think it's still important to note that it's up 11.5% for the day. So clearly this is a strong narrative. Although at rank 18, I do think it has short-term potential here to grow. Like in the short term, definitely, I think that there's hype. There's definitely a hype trade. Long term, when I look at this at rank 18, I think it's kind of preposterous. I think it's far too highly valued at $5 billion for Ethereum Classic. Long term, not bullish on this token at all. Short term, actually, I would say I'm swaying bullish. But there are better options. One of those better options is LIDO. So I do prefer LIDO as a play. We saw this massive pump. So I talked about it on yesterday's show that I was starting to look into buying some spot LIDO. Basically, after that show, I think it was on the 14th. It was around here. We pumped 30%. So it was crazy. We were 30% up on LIDO. It was nuts. Unfortunately, I couldn't have a show to tell you guys to take profits. Otherwise, I would recommend obviously taking a tiny bit off the table when it pumps. You could probably take 30% off and then reinvest it when it comes back down. Now LIDO is back at the levels pre-show because we did have the sell-off in the NASDAQ. So I still think LIDO is actually a decent play here, a decent buy. Clearly, there was some demand for it post-merge. Clearly, it's a narrative people are going to be looking at post-merge. If you don't know what LIDO does, the quick TLDR is it's the biggest liquid staking platform. The more people that stake Ethereum through LIDO, the more the LDO token accrues value. That's such a simple explanation for you guys, but I did give you the more broad explanation on yesterday's show if you want to learn more about LIDO. But it's liquid staking. They're the biggest liquid staking protocol, meaning you can stake your Ethereum without having to lock it up through LIDO's pools, and they stake it on your behalf, give you staked ETH in return. So LIDO, definitely one I'm looking at accumulating. Rocket Pool as well is in that same league, but that's more like node staking. Both of them are beneficiaries long term, because if you just think about it basically, long term, the Ethereum merge does one thing, and that is facilitate staking. And the more people that the higher demand for staking Ethereum tokens, the more people are going to need to use services like LIDO, like Rocket Pool. So I see them as narratives that do have high growth potential, even in the short term, but particularly with like a 3 to 6 to 12, 24 month time horizon, depending on how you're investing. I think they can all perform well. LIDO is up from its lows though, so just be a little bit careful. It can drop probably down to this dollar region again is where I'd say it would have heavy support. So yeah, DCA approach with coins like this, because there's not really a huge rush, but I am picking some up now just as a, starting to get some initial entry. I guess you could call it an indirect hedge against upside. Although, we saw El Capo hedging against upside on his Bitcoin position yesterday, and he got wrecked basically straight after buying. So hedging up against upside in this market, it can be a fool's game at times, but my time horizon is much, much longer than his, so I think it's okay. The next major ecosystem we have to talk about is Apecoin. Some of you may hold Apecoin. Some of you may be considering buying Apecoin with this latest staking that's coming out. I will give you my opinion and my take on this. It's kind of a controversial take on Apecoin. Basically, what you need to know is that they did this governance proposal. It got approved a few months ago, and that was essentially to integrate staking into their metaverse staking ecosystem, which there's all the specifications here that I won't get into, but essentially they are going to be giving away incentive for staking in the staking pools. This is what the staking pools look like. So you have multiple staking pools here: the Bathing Ape Yacht Club, the Mutant Ape Yacht Club, the paired pool with BAKC, and then you've got also the staking rewards. So this is how the pools will be allocated capital: 35 million ape for Q1, 30 million ape for Q2, 20 million, and then 15 million for Q4. So staking is going live very, very soon on ape. So that's a major incentive for people to lock up tokens. Major caveat coming though. So they just provided a staking update 5 days ago that they are going to be doing a Twitter Spaces with the Horizon Labs team and starting announcing the staking, when the staking begins. I think this will be within the next couple of weeks that the staking actually begins, and they've timed all of these announcements at once to kind of build up some hype behind staking. They're very smart with their marketing, the Ape team. They are always pushing things very strategically in terms of how they roll out announcements. Now, there's an issue though. There's a big issue. And that issue is this token unlock. There's 32 million ape about to hit the market in a day and a half. Actually, a day, 24 hours. There is a major unlock. It's actually 3.2% of the supply. That's a big unlock. That's $157 million. And if we look at the ape total supply right now, if CoinGecko decides to load, the ape total market cap at the moment is 1.5 billion. So it's quite a major unlock. 157 million. That's 3.2% of the total supply, not the fully diluted supply. For 3% of the total supply, circulating supply, because it's only 300 out of a billion tokens. That is quite a big unlock. So I have a theory, a controversial theory, that and it's not that controversial because it's many tokens do this. Sandbox did this. They make major announcements around unlocks to kind of divert the attention a little bit. So what I think is happening is it's a classic trick in the book on the marketing side of things. They will announce staking. They will kind of get a bit of hype building. They release these videos and they get hype generating behind a major event like this, which everyone's looking forward to. And then essentially that kind of masks over the token unlock, because they try and kind of artificially create demand side to counteract the supply side, which obviously doesn't look great. So if we actually look at what happened to Sandbox, if you go back to the Sandbox unlock, which happened on August 15th, they did a very similar thing. When the Sand tokens unlocked, it was basically just a path downwards for Sand. So, I mean, we've seen a correction of 40% from Sandbox since. Although it's dealt with a difficult macro environment, I mean, in that same period, Bitcoin, has only gone down 10%. So Sandbox clearly underperformed post that token unlock. I think a similar thing could happen to Apecoin here. Look, obviously, it's apples to oranges. It's a different coin. Apecoin probably has a little more hype behind it right now, but it still just goes to show when these unlocks happen in a bear market, it's hard to be extremely bullish in the short term. So Ape holders, just be a little bit cautious about this unlock. I do think long term, Ape is actually still a token that interests me as a hold, but we do look at the cliff here and it is steep. There's still major unlocks to come, and we know it's a VC dominant coin. So when we look at the holders, think about where Apecoin was actually airdropped. Apecoin was airdropped to the richest holders of the Bathing Ape Yacht Club, and the ones that could afford $100, $200, $300,000 NFTs. They were the ones, the whales, or essentially the big players that got access to these tokens. Those guys, I would say, have a slight inkling to dump those tokens, because they obviously got huge free airdrops, and they would have an incentivization to dump the tokens at some point. So just be careful with Apecoin. That's my only point here. The last ecosystem, and probably one of the biggest ecosystems that I want to talk about, that I probably should be talking about more on the channel because it's massive and the SDK is amazing. That's Cosmos. A few things happening on Cosmos at the moment that I think you guys should be aware of. And this is one of these narratives. There's two narratives I want to discuss now quickly that I think can definitely rise to prominence post ETH merge. And that is the Cosmos airdrops firstly. So there's many airdrops coming. If you guys don't know how the Cosmos token accrues value, honestly, this is the reason why Cosmos has been pumping. So a lot of people have been asking me, why is Cosmos pumping? Because, it's been pumping against the market. It's been showing relative strength. Let's look at Atom Bitcoin just quickly to show you the relative strength. It has been strong. This is crazy. Cosmos over the last couple of days exhibiting massive strength. This is off the back of airdrops, because if you guys don't know how Cosmos accrues value, it accrues value via airdrops. So if you stake Cosmos tokens, they don't give you like a percentage of trading fees. They don't buy back and burn tokens like other chains or exchanges. How they accrue value is airdropping you Cosmos ecosystem tokens. So if a project builds on Cosmos, and you hold Atom tokens and you stake Atom tokens, you get, based on how many Cosmos you hold, a percentage of those new tokens actually airdrop to you. So people have an incentive to hold Cosmos. I've been critical for quite some time about this strategy, because the problem with the airdrop incentivizations is that if you get a period in time where there's not many airdrops, or where the market's kind of dead, and people aren't that keen on getting $500 worth of free airdrops, or even less in most cases, then there's not really a huge incentive to hold the token. And from a long-term perspective, if we look at the chains that can accrue major value, they are the chains technically that are the ones that can exhibit burn. So Ethereum becoming deflationary is massive, because if it really gets to, like, let's say 1 billion users one day, when everyone's using Ethereum, if we see Ethereum essentially become a new internet, then think about the crazy mass burn that's going to be occurring, the network effect of everyone holding those tokens, using those tokens on the network day to day. Cosmos isn't really like that, because its main appeal is the projects that's built on the SDK, that's built in the Cosmos ecosystem. Those tokens don't burn Atom. So that one of the biggest ways that tokens accrue value, L1s at least, is kind of not relevant to Cosmos. But they've gone after this airdrop approach, which can work, and it also can fail. So I am skeptical still of Cosmos, but there is a lot of hype building right now, and clearly the market is pricing in some of these airdrops. So when we look at the Cosmos upcoming airdrops, there is a lot. There's Rebus, Muse, Aqua, all within the next day. STRD. I don't know all of these projects, by the way. I know some of them. QCK, SHD, and then 5 after the conference. So there's you'd be getting heaps of airdrops if you are in Cosmos. This guy says GNOT and QCK are the ones he's looking forward to. So the conference then becomes the next talking point. Well, there's an Atom conference, right, on September 26th, which is in 10 days in Colombia, in Medellin. I wish I could go. I'm in Australia right now. I'd love to go to the US. If I was in the US, I would go to South America. I can't, unfortunately. But I would definitely be going. If you're in the US and you've got the funds to go, and you're interested in networking and getting more into Web3, look into this Cosmoverse. I know a lot of big people that are going. I know a lot of very cool devs, cool guys, friends of the industry that are going to this. So if you're close, maybe if you're in Florida, or in the south of the US, consider it, because it's going to be a good conference. And this is definitely one that I have got my eye on. So it's got a lot of big announcements coming, and this is basically the agenda for the conference, which is in 10 days now. Day 1, day 2, major speakers, major announcements. It's got to be pretty big. What we saw happen with NEAR could happen with Cosmos. So what happened with NEAR is the pump leading up to the conference, then a sell-off post-conference. But to be honest, the sell-off wasn't as big as we thought. This is on the Bitcoin pair, because of some big announcements that we got. So we got the blockchain supporter VC fund. By the way, Rand did a conference video that's out tomorrow. So that's going to give you details on all this, what's happening on NEAR protocol. I'm extremely bullish on NEAR protocol long-term. It's probably in my top 3 favorite L1s, excluding Ethereum. It would have to be in the top 3, up there with probably Sol and Matic. All very big ecosystems, but I think NEAR offers slightly better risk reward in terms of its upside. Probably has less development happening than Matic, but lower market cap, which kind of you got to weigh that against the potential rewards. I'm very bullish on NEAR, but that's a separate story for a separate video. You'll learn all about NEAR tomorrow on Rand's conference video. That's going to be awesome. But they actually announced a 100 million VC fund. And what they also announced was Tether launching on NEAR network, as well as another 4 announcements that I won't spoil because I'll let Rand cover them. But those big announcements resulted in less of a sell-off than I actually thought for NEAR, despite having some volatility due to the recent stock market sell-off. So NEAR actually pumped from this low to this high 30%. Atom has done a similar thing. It's pumped, 200% against Bitcoin. If we look at its dollar value though, because the Bitcoin pair isn't as relevant because obviously Bitcoin can, rise as well. The Atom pair from its lows in terms of dollars is only up. I say only 146% from lows is quite a lot. Since it broke major resistance, it's up 40%. So you could make the argument that this is a pre-conference hype play. Usually with the Sell the News conference events, we see the sell-off happen usually like a couple days before the conference or at the conference. Usually it doesn't happen 10 days out. So if you think the market's going to rebound, if you think we're going to get a reversal in the NASDAQ, a reversal in Ethereum just in the short term over the next week, then it would make sense to play Atom as one of those coins that you trade just because it is leading into a conference. It does have some big airdrops coming, and you need to hold Atom to get these airdrops. So the incentive to hold Atom, I would say, is fairly strong over the next week or so. Or over the next few weeks, right? There's a conference, there's airdrops, there's enough reasons to hold Atom for me to be confident enough not to dump now. So if you think the market is going to show some strength over the next week, then Atom would be one of the ones I'm looking at for sure. And over the next few months, I'd still be looking at it because heading into December, it's going to get very interesting. Long term, I'm actually, I'll just be honest. I'll always be honest with you guys. I'm not the most bullish on the Atom token. I really struggle to wrap my head around how to price airdrops because they're so sporadic. You don't know when they're coming. You don't know how much you're getting. Really, it's all very up in the air. Whereas something like a DOT, I can actually model based on fees. Similar play, I can model Ethereum based on fees. I can model something like it's still hard with them, but I can model NEAR protocol. I can model Solana. Atom becomes a little bit harder because it's more of an ecosystem rather than just like an independent chain. But still, bullish ecosystem. And I think the best play on Atom isn't actually Cosmos itself. It's these tokens that are launching on Cosmos, guys. The tokens that are launching on Cosmos that have great development incentives, that have great teams. We've seen DYDX start to launch as well on Cosmos. They're launching their own chain. These projects will be the ones that exhibit the most growth. Sorry, I'm still a little bit sick. These will be the ones that exhibit the most growth because they are taking advantage of the benefits you get, the interoperability, the security, the ease of use, ease of development on Cosmos itself. Interesting eco, probably deserves a deep dive from myself soon. But then again, I don't know if I want to do a deep dive during the conference. That's playing into the hype a little bit too much for my liking. But if anything happens like the NEAR conference, we could still see that pump into the Atom conference. And then the last major event that is coming up, so we've talked about a lot. We've talked about the Ape event, the LIDO stuff, the Ethereum merge, the burn, the Atom, Cosmos, NEAR. The next big event that's coming up is on ADA. Now, this actually could be the next narrative. And this is the ADA Vasil hard fork, their biggest network upgrade since they originally launched. What the Ethereum merge was to Ethereum is what the Vasil hard fork is to ADA. On a much smaller scale, because ADA has much less ramifications for the market, given the chain's hardly used relative to other chains. It's still a massive event for ADA. You can't deny that. It is a big day for them. What we saw with smart contracts was that major sell-off. We saw that major sell-off after smart contracts were announced, last September. And then, basically that was the high of ADA. That was the high. This sell-off at the start of September. That high was smart contracts, and then it crashed. This Vasil hard fork, I think it's a little bit different. It's not in a bull run. Bear market vibes. People are less kind of hypey. I think at some point this rips. I think maybe even some point before the hard fork. Maybe even post hard fork if it's successful, because we keep getting delays. It is going to go ahead on September 22nd. And ADA is one I've got my eye on, because we could see a rotation from ETH into these other ecosystems now that the merge is over. So if we look at the ADA ETH chart, Cardano, Ethereum on Binance, we can see it is starting to show some strength. And potentially this could keep running. I mean, if it got up to its previous highs of 4.8, which wasn't even that long ago, it was just a couple months ago, post Vasil, or pre-Vasil most likely. That's a 52% rise against Ethereum. I do see a capital rotation happening at some point. I definitely see ADA as one of these ecosystems. So look for the break of trend on the diagonal here on the 4-hourly. That could definitely be an indicator of us gaining a little bit of strength in this ecosystem. We've already seen some strength, basically, a little upwards trend here, a little upwards channel starting to present itself with my very basic TA, but this is essentially what I'm seeing. I'm just trying to track momentum for you guys. I'm in an easy way to understand. I'm just going to check the EMAs real quick. This is an indicator that I like to use. And we have bounced off all the EMAs and broken above, which is always a good sign on the 4-hour. On the 1 day, which is a longer trading time frame on Cardano, we still have a bit of work to do. We broke past the 50 and 100. We still got to 200. So keep our eyes on this. Keep our eyes on ADA. That could be one of the next rotations. It's just very soon. So whether people probably want to play the pre-game here of preempting this rotation. But I think the Ethereum merge just took so much attention of ADA, took so much attention of Atom, that we may see a slight delayed narrative here, just due to just the size and the magnitude of the ETH merge. I am 30 minutes in here. Someone mentioned Vault Inu. I'm not a huge Vault Inu fan. I mean, I don't really know anything about it. Check it out if you want. How deep are your dives? Muff deep. They're pretty deep, bro. The dives are deep. Loonsea will be a winner. I don't think it will. Sorry, bro. I'm really sorry. I'm not bullish on that at all. And we made a crap ton off Loonsea. Like, congrats, everyone. I was covering that last week. We 3x'd. And if you were trading leverage, I'm not a huge leverage trader. But if you were trading leverage, you would literally be up like a 15, 20x, and you'd be almost retired by now. So, no, I'm basically all out of Loonsea. I said this on my Twitter as well. I said I'm selling Loonsea, and I sold at the top. It's one of the only tokens I've sold almost the exact top of. But I, slightly after, I didn't get the exact top. So that was a great trade. Miles, why is your TA so spectacular? I don't know, bro. I'm just gifted with TA. I've just got this gift. I actually think I think I'm an okay TA guy in terms of drawing charts. Like, I understand how to make charts in terms of like the levels, the supports, the resistances, how to read EMAs, timeframes. I actually think I'm decent. What I'm not so good at is like the actual timing of trades. That's the hardest part of trading. It's actually, you can be a great chartist. You can have great levels. That doesn't make you a great trader. And I think where I've come unstuck in the past with my trading is the greed factor. So I'm pretty good at getting the entries, pretty good with the charting. But then as soon as it comes to actually taking profits, and I get very greedy, and I've failed in the past to do that. That's my major issue, one of my major flaws with trading. So and that's something I'm working on. But I'm also not a massive trader. Like, I do swing trading. I definitely trade on some of these bigger time frames, but I'm not a leverage trader like Sheldon, where I'll put in on the 15-minute chart or the 10-minute chart, a quick leverage scalp, 10x leverage, and then get out. I don't trade like that. I don't find that to be very high percentage. At least, honestly, in this market, that style of trading I find doesn't work, at least not for me. In a bull run, it fucking works because you just trade the breakouts. You get a 10% move, you take your profits, you're on to the next coin that hasn't broken out. Very easy to trade breakout trends in a bull market. Becomes difficult to trade breakouts in a bear market. So I don't really like it. That's why I prefer more of like the Gareth Soloway swing trading style approach. I'm working on like a bigger trade overall with my portfolio leading into midterms. I'll get into this in next week's video, what my actual plan is. I could be totally off the mark here, but basically, I'm planning on, I do see a rally pre-midterms. It just makes sense that the Democrats, that, the politicians, they will want a strong market leading into midterms. If that's the case, and if we do get that rally, that's a good time to take profits, maybe swing some of those into shorts post midterms on very low leverage, potentially, or, maybe just kind of use the selling spot as a way to hedge and get some cash and buy back maybe Q1 next year when the market kind of takes another leg down. That may even be December, may even be sooner. That's kind of my plan. But I'll get more into that in the future because there's a lot of nuance that I want to go into that I won't go into now. And I don't think it's fair to take up another 30 minutes of your time right now. But if you do want to have that discussion, let's do it on the Instagram because then I actually can talk for another 30 minutes, and it won't make this show an hour long. So yeah, we could pick up that conversation on my overall swing trading plan. How I think the market will go over the next 6 months. I'm not a fortune teller, but I certainly do have a thesis that's based on what I've heard from the biggest macro economists and whatnot that I think could definitely play out. So I'm gonna go live right now in case you do want to join and hear some of that chat and ask me any more questions, because I do want to answer some questions. I see a few questions on NEAR. We'll talk all about NEAR on the Insta and all about that stuff. So the advice shines your hair. Just quickly, before we go into Insta, everyone says, oh, Miles, you don't wash your hair. Use shampoo, bro. I'll tell you the reason why it looks like this. Firstly, there's 2 massive studio lights here. In fact, can I show you them? That's like, yes, this is a green screen, obviously. Massive studio light there. Massive studio light there. So it's adding this extra shine onto my hair, which and making me look really pale. I can make myself look tanned if I want, but then I look all yellow, so I just go with the white lights. So yeah, I look pale, and then the hair goes shiny. And the other thing is, my hair's actually wet. Why is it wet? Because I have a shower before the streams, because I like to freshen up. It is morning for me, so it's 10:30 a.m. and I start the streams at 9:30 to 10. So I'm very tired, so I need to have a shower, a coffee to wake up, and my hair doesn't have time to dry in the meantime. So that's why it looks wet. I do wash it once every 3 days for everyone that's interested in my hair routine, which I'm sure not many of you are, but maybe some of you are. These comments are too funny tonight. Yeah, sometimes we get some funny comments. But yeah. All right, let's head over to the Insta now. Let's have a chat over there. Remember, I do follow people back that support my Instagram. Always like supporting you guys, so I usually follow a couple people back. If you support my content over there, and we have great chats over there. I really enjoy the Instas. I do enjoy these shows a lot too. This is where you get your alpha, where I've researched. You get it quick, you get it straightforward, and then my Insta, you get it just loose. You get me off the dome, just random thoughts, all that stuff. All right, cool. I'll see you in the next one. Peace out.